So today let's look at financial institution. What is financial institution and the type of financial institution? We want to talk about financial institution. We talk about business organization that deals with money for individual and organization and may give out loan. Financial institution talk about business organization or institution that deals with what holding money and giving out money as a loan. Finance. When I talk about finance, talk about what money. So anytime I talk about financial institution, what should come to your mind is what money. Money, financial what? So talk about what money. So any regard to financial institution, we simply talk about an institution that has to do with what holding of money, giving out money as loan, and others. So in a nutshell, financial institution are business organization that deal with what holding what money for individuals and organization, and they also give out what loans. Or we can say that financial institution may be defined as an organization whose principal operation is to accumulate temporarily idle money for individuals and organizations for the purpose of giving it to others for expenditure. Look at the keyword there, financial institution. You see money has come to play again. So when they about financial institution, what thing should come to your mind is what money. And what does the financial institution does? The financial institution, they simply what help to hold money and what give out this money. So anyhow you choose to define financial institution, just ensure that money is there, and also the purpose for the financial institution is to what to hold money and also to give out this money as what expenditure. So if I should define it in another set of terms, I say financial institution is a business organization or an institution which help to what hold money for individuals, business organization, and from government, and also give out this money to what the various economic agents such as individual, business organization, or the government. So what about financial institution? Talk about what an organization that what hold what money for what individual, business organization, and the government, and also what give out what is money. But before I go further, let me just explain each of the words used in this definition. They say it's defined as an organization. Yes, an organization is like a registered enterprise whose principal operation, the principal operation is why they establish it. The principal operation is to what accumulate. What the meaning of accumulate? To gather together. Temporarily idle money. Temporarily what? Idle what? Money. What is temporarily idle money? When we talk about temporarily idle money, we simply refer to money that is not planned to spend any moment from now. Money that one does not plan to spend any moment from now is called temporarily idle what? Money. For example, they pay me my salary, I choose to keep 30,000 naira that I'm not spending this 30,000 at this month. That 30,000 naira that I keep as part of my salary and what idle what money. So any financial institution, I can go and give it to the bank to keep it for me. That's what temporarily what idle money. So the financial institution, they will collect this temporarily idle money and look at what another terms here, giving it to others for expenditure. So that temporarily idle money they collect from me now, as I put it in the bank will give it to other people to what spend, either as loan or what withdrawal. So when you go and keep money in the bank, the money is not kept there just like the money is given out to others for expenditure, either as loan or what withdrawal. When we proceed very further, we understand this concept very well. But what I want you to know in terms of financial institution, they are business organization. They are established to what help to what accumulate idle money or to what hold money for customers, and also to give out this money as what expenditure. And other types of financial institution, we have two types of financial institution. We have what two types of financial what institution. We have the banking financial institution and the non-banking financial institution. The banking financial institution and the non-banking financial institution. When we talk about the banking financial institution, we talk about the financial institution that has to do with what collecting money from what the public or holding money for the what public and giving out this money on what demand or on request. Talk about they take money or hold money for the public and they give out this money on what request. But non-banking financial institution, they don't receive money from the public. They don't what receive money on the from the what public. But specifically, let's go and look at the difference between banking financial institution and non-banking financial institution. One, the banking financial institution, they create money. They create what? Money. Why the non-banking financial institution, they don't create money? How can the banking financial institution create money? The banking financial institution can create money by giving out loan. When they give out loan in economics, the money that is given out as loan has a multiplier effect. When we talk about multiplier effect, we talk about increased total volume of money in the economy. When we proceed, we talk about the rates at which commercial bank creates money, which is 1 all over the interest rate, which is the multiplier effect. But when we proceed, I'll give you a vivid explanation of that. So when we say that the commercial bank or the banking financial institution, they create money, creating money is different from minting and making of money. To create is to what? Give out loan to increase the volume of money in circulation. While to make or mint money is the work of the central bank to what? Produce either paper money or what? Coin money. Then another one of the difference between banking and non-banking financial institution. For the banking financial institution, their liabilities are counted as part of the total supply of money. For the banking financial institution, their liability are counted as part of the total supply of money, while the reverse is the case for non-banking financial institution. When we talk about liability in banking sector, liability talk about the total volume of money that is being deposited with the bank. The money that is deposited with the bank, if we all of us in the school go and put 20,000 naira in GT Bank, we each person put 20,000 naira. That money we are putting in the bank is a liability to the bank. They are indebted to us to the sum of 20,000 naira each. So that money we put in the bank will serve as a total part of the supply of money in circulation. Supply of money and demand of money is a topic on its own, which we will look vividly as time proceeds. So what about the supply of money? Let me give you a clue. It's the total amount of money in circulation. In what? Circulation. Let us just leave it at this level. Supply of money, total amount of money in what? Circulation. So that money we went to deposit in the bank is part of money circulation because the bank will give it out as loan to other person. But for the non-banking financial institution, they don't give out loans per se. They don't give out loans. So the money that is being deposited with them or given to them, it does not count as the total amount of money in what? Circulation. So let us list some example of banking financial institution. Banking financial, we have the central bank, like the Central Bank of Nigeria. It's a banking financial institution. We have the commercial banks, like your Eco Bank, GT Bank, FCIB, Zenith Bank, UBA, others. They are what? Commercial bank. They are banking financial institution. We have Development Bank. We have Savings Bank. We have Mortgage Bank, which give out loan for building of assets. We have Merchant Bank. We have Microfinance Banks. All these are what? Banking financial what? Institution. Then we have the non-banking financial institution. We have the hire purchase company, where you buy a commodity and you pay gradually. We have the insurance companies. We have the mutual fund and life assurance companies. We have the discount houses, acceptance houses, building societies. These